Good morning. Welcome to your daily solo 401k webinar and Q&A session with my solo 401k financial, where we try to help you stop overpaying taxes by utilizing a solo 401k as a tax shelter vehicle and hopefully start building real retirement wealth. So as always, we use these daily webinars to cover certain topics, to also answer your questions regarding any aspects surrounding IRAs or solo 401ks. So this is your chance to get answers. Go ahead and use the chat, type over those questions, and we'll get to them as they come in. I do see that someone has already posted a question. So let's take a look at that. Good morning. I have already contributed $7,000 to an IRA last year prior to opening the solo 401k. Does the $7,000 count towards my 23,500 employee contribution? Good question. We get that question quite a bit. And in short, it does not. Because number one, solo 401k contributions are not impacted by contributions that you make to your traditional IRA or Roth IRA for that matter. Now, IRAs, specifically traditional IRA contributions, are impacted, however, by contributions that you make to a solo 401k plan. And the way those IRA contributions are impacted has to do with your modified adjusted gross income and whether or not that IRA contribution is deductible versus not tax deductible. So when you contribute to any type of 401k plan, whether a self-employed solo 401k or even a traditional 401k, the contribution to the 401k will impact whether or not your traditional IRA contribution is tax deductible or not for the year. And that's going to be driven by your adjusted gross income. We actually have a good page on our website that covers contributing to both an IRA and a solo 401k plan in the same year. Let me share that link with you. Now, Roth IRAs, those contributions to a Roth IRA also do not impact your solo 401k contributions, whether Roth, pre-tax, or voluntary after-tax solo 401k contributions. However, Roth IRAs do have an income limit. So if your modified adjusted gross income is over a certain threshold, excuse me, I've been battling a terrible cold here. If it's over a certain threshold, you may not be able to make any Roth IRA contributions, and that's where the backdoor Roth IRA comes into play. Interestingly enough, a lot of our clients, especially high income earners, they actually perform both the backdoor Roth IRA and the mega backdoor Roth solo 401k in the same year. We also have a small number of clients that contribute to both their daytime employer 401k as a mega backdoor Roth 401k for that daytime employer, because that daytime employer 401k allows for voluntary after-tax contributions. Then they also open up a solo 401k for their side business, and they do a mega backdoor Roth for their solo 401k plan. And then they also open up an IRA, and they do a non-deductible IRA contribution and perform a backdoor Roth IRA. That's what I like to call the trifecta, where you process a mega backdoor Roth 401k with your daytime employer, a mega backdoor Roth solo 401k with your self-employed solo 401k plan, and then a backdoor Roth IRA. So talk about really supercharging your retirement savings. Okay, I shared that link there with you regarding how you can contribute to an IRA and a solo 401k plan. So take a look at that. Looks like we've got some other questions here. So again, today's topic is Fidelity Register Investment Advisor, how he or she can open a solo 401k plan for his or her clients so that so that so that their clients can perform year 2025 solo 401k retroactive contributions by opening a solo 401k plan if that self-employed person's business is a sole proprietorship. So we're going to talk more about that here today. But we're also going over various questions as well. So let's take a look at the next question. Here's a question. I am trying to transfer my old E-Trade solo 401k into my new restated solo 401k. E-Trade is telling me they can't do a direct transfer. They say they have to do a direct rollover, which will generate $1099. Is this the right way to do it? Good question. So E-Trade is pretty backwards. I hate to say it, but over the last couple years, they just give out flat wrong information. And that's why many of our clients no longer use E-Trade for their solo 401k brokerage accounts. I've seen E-Trade take as long as 9 months before they even open up brokerage accounts for a self-directed solo 401k plan. So I guess my question for you is, are we helping you to open up brokerage accounts at E-Trade as well for the solo 401k that you open with us? And then we would help you restate, move those existing E-Trade solo 401k funds over to the new solo 401k brokerage accounts that E-Trade would hold. And again, I don't recommend using E-Trade, but if you decide to use E-Trade to hold the funds for the new solo 401k plan, then be aware that it takes about 9 months before E-Trade opens up those brokerage accounts. As a result, many of our clients will utilize Fidelity Investments to hold the funds inside a non-prototype brokerage account for the solo 401k that we offer. And when you move an existing solo 401k from anywhere, even E-Trade, that's called a restatement, which means that it does not result in tax reporting to the government. So no Form 1099-R applies. And also, you do not file a Form 5500 easy to close the plan with the government. Those only apply if you were closing your plan. In this case here, you're switching from provider A to provider B. So you're essentially picking up an existing solo 401k and moving it. So you're not closing your business, you're changing plan providers. So no, it does not result in issuing a Form 1099-R. Now, if E-Trade does issue a Form 1099-R, it's not going to be the end of the world. And here's why. Because as long as they utilize the code G, as in George, in box 7 of that Form 1099-R, that's going to tell the IRS that these funds were moved, but it was not a taxable transfer because it was moved within the same plan. So yes, E-Trade should not be issuing a 1099-R, but if they do, make sure that they use a code G in box 7 of that Form 1099-R. So hopefully that sheds some light. If not, go ahead and send us an email and we can look at it a little more closely. But yes, E-Trade is horrendous to work with. Even helping to open up new brokerage accounts at E-Trade. So I'm not surprised to hear what you're telling me there. Do you know how long Schwab usually takes to open a non-prototype account after we submit the paperwork? It depends on how busy Schwab is, but typically it takes 5 to 7 business days for them to open up the brokerage accounts. Is it faster if we have a financial advisor open the account through the Schwab Advisor portal? It's not. The majority of our business is actually advisors, institutional is the lingo used in the industry. Obviously, we also have a lot of retail clients, so non-advisor clients, but no, it's not faster whether you do it on the retail side or the institutional side. It's all driven by how busy the financial institution is. Right now, it's January, so they shouldn't be as busy as they were in December. But keep in mind that from a timing perspective, you still have plenty of time here in 2026 to make tax year 2025 contributions if you already established your plan by December 31st of 2025, because you have until your business tax return due date plus timely filed extension to make all contribution types. I'm going to stress the word all, because all encompasses employee contributions, employer contributions, and voluntary after-tax solo 401k contributions. That even applies to an S corporation. I get that question quite a bit because a lot of financial professionals out there try to lump a self-employed solo 401k into the same bucket as a traditional 401k from the contribution rules side of things. A solo 401k plan is for owner-only businesses, whereas a traditional 401k plan is for a business that employs common law W-2 employees, so the contribution rules are different. As a result, the contribution deadline rules are more favorable for a solo 401k plan from a timing perspective, because a solo 401k plan is for owner only business, because you cannot open a solo 401k plan if you employ full-time common law W-2 employees or long-term part-time W-2 employees. Now, here at my solo 401k financial for our clients, we'll fax the Schwab company retirement brokerage account forms to Schwab for the solo 401k plan that you open with us. And then Schwab will send you an email once those brokerage accounts have been opened, and then you'll be able to log in and you're going to be able to go in there and nickname your various brokerage accounts. So you'll typically have a total of 3 brokerage accounts if we're referring to a 1 participant plan. If it's a 2 participant plan, it would be a total of 6 brokerage accounts. So let me spend a little bit of time going over that. Here's an example of a 1 participant plan. So if you utilize Schwab, we would help you to open up a solo 401k plan through my solo 401k financial. Here at my solo 401k financial, you get to choose where to hold the funds at. It's your money. So the way we view it is that you should decide where to hold the funds at. So as the solo 401k plan provider, we'll help you to open up the holding accounts, aka bank or brokerage accounts for the plan. In this scenario, if you're using Schwab to open up the brokerage accounts for a plan offered by my solo 401k financial, as the slide here displays, the plan, it would be 1 plan sponsored by that self-employed business. There's only 1 participant in the plan, so a total of 3 separate holding, aka brokerage accounts, would be open at Schwab. So we would prepare 3 sets of Schwab company retirement brokerage forms for your signature. Once you sign those documents, we'll fax them to Schwab. Schwab will send you an email letting you know when those 3 brokerage accounts, that is the pre-tax, the Roth, and the voluntary after-tax, have been opened. You're then going to log in and you're going to nickname those brokerage accounts. You're going to label the first one pre-tax, the second one Roth, and the third one voluntary after-tax. So these are separate holding accounts, aka participant accounts, for each source of funds under the solo 401k plan. So it's still considered 1 plan. A solo 401k is a defined contribution plan, so you are required by law to separately track each source of funds as well as each participant's funds. Here's an example of a 2 participant plan. You're going to have a 2 participant plan in some instances. For example, let's say you and your spouse are both self-employed in the same S corporation. So the S corporation self-employed business sponsors the solo 401k plan. We would draft 6 sets of Schwab brokerage forms. This can be done at other brokerages like Fidelity Investments as well. Those are the 2 most popular ones, as a matter of fact. So we would draft 6 sets of Schwab company retirement brokerage account forms, whether retail or institutional. We would fax those to Schwab. So 3 each. So a pre-tax, a Roth, and a voluntary after-tax times 2, because there are 2 participants in the plan. So 1 plan, 6 separate holding accounts because the regulations require that, well, number one, you separately track each participant's funds, and number two, each source of funds. And then you would nickname those brokerage accounts accordingly. Okay, give me a moment here, please. It's that time of the year. I heard there are 3 strings of the flu going around this time of year. I actually had one of the strings, and sounds like I'm working on the second string. Okay, let's take a look at some more questions here. Here's a question. Completing the online Fidelity Solo 401k accounts, my business operates as an entity, but the Solo 401k plans were completed to show my name as the company name. Which name should I use on the Fidelity forms? Entity name, my name, or a combination of both? My email directions have my name as the company name. So it appears that your self-employed business is a sole proprietorship. So keep in mind that any type of business can sponsor a solo 401k plan, whether it's a sole proprietorship, S corporation. Let's say you're a farmer, so you file a Schedule F, a partnership. So if your business is taxed as if your business is a sole proprietorship, then that's where the name of your self-employed business is listed, which is essentially your name, unless you file for some type of DBA. So in short, you need to list your name there if you are a sole proprietorship and you don't have a formal entity like an LLC, S corp, partnership, or a doing business as. Okay. Let's see if we have some more questions here. Here's a question. What is the fastest way to do a partial rollover from an employer 401k at Schwab to the new Schwab company retirement account? Request a check via mail and then deposit it to the Schwab brokerage account. Open an IRA at Schwab, then electronically transfer the money from the employer 401k to the IRA and then to the solo 401k brokerage account. Good question. So there are 2 things to be aware of here. Number one, if your former employer 401k does not hold any equities, so it doesn't have any mutual funds, for example, or stocks, which typically former employer plans don't allow for investing in stocks, but rather index funds. If you have any type of index fund or mutual fund that you want to that you do not want to sell and you want to transfer that in kind, then yes, you're going to want to open up an IRA. So you would open up an IRA at Schwab and you would have Schwab move over those securities in kind along with any cash in that former employer 401k to that IRA at Fidelity, to the IRA at Schwab. Subsequently, we would help you transfer that IRA at Schwab, including those investments, without having to liquidate them in kind over to the solo 401k plan. So that would be the fastest way of doing it. Now, if your former employer plan only holds cash, then Schwab will be able to move those securities in kind, that cash in kind over to the solo 401k plan. So that's determined by employer. So obviously Schwab is not the provider of your daytime employer's 401k, they're the custodian. So you're going to want to check with Schwab as to whether or not that former employer plan allows you to transfer a 401k from that former employer 401k internally to a brokerage account for a solo 401k plan. If they do, then that's going to be the fastest way of doing it, which is to move that former employer 401k, if you're just moving cash, over directly to the solo 401k plan. If they say no, they have to mail you a check, then the check would be made payable in the name of the solo 401k plan for your benefit as the trustee. Then you have to turn around and send that check back to Schwab for deposit into the solo 401k brokerage account or take it to the local branch for deposit. So in short, It just depends on your former employer's procedure, and Schwab is going to know that. Okay, let's keep going on here. Here's a question. My business is an LLC with S corporation election. My wife and I are sole employees, and we receive W-2 income. I'm trying to maximize Roth contributions. So as recommended, I'm using max employee Roth contributions and after-tax employee contributions to perform the mega backdoor Roth strategy. My tax advisor who manages my payroll says employee and after-tax contributions are limited by net after withholding compensation. They claim I don't have sufficient net after-tax W-2 income to make planned contribution. So it's important to understand that for an LLC taxes an S corporation, the contributions to the solo 401k plan, whether you're making employee contributions, employer contributions, voluntary after-tax solo 401k contributions, those are all going to be based on your respective W-2 wages from that LLC tax as an S corporation. So you're going to have enough W-2 wages to support your contributions. So for example, let's say, and you're going to use box 1 of the W-2 wages. So box 1 of the so that's the gross wages. So if you and your spouse are both self-employed under that S corporation, that LLC tax as an S corporation, you each need to have a separate W-2. So a total of 2 W-2s, one for your spouse and one for you. And then you calculate the contributions to the plan based on your respective W-2s. Now, when you're looking at that W-2, you want to look at box 1, which again is the gross wages. Now, sometimes you also want to look at box 12A of that W-2, box 12A. So if you look at that box 12A, and if there's an amount, if there's a dollar amount listed in that box 12A of that W-2, you want to make sure you add the amount in that box 12A to that box 1 of the W-2. So let's say box 1 of your W-2 reflects $50,000 of gross wages. And let's say box 12A has $10,000 listed. Make sure to add that 10,000 to box 1. So that would be a total of 60,000 in your contributions to the solo 401k plan. Employee, employer, and voluntary after tax will be based on that $60,000 of gross wages from your W-2. Let me share a link from our website that talks about how to calculate contributions when your self-employed business is taxed as an S corporation or even a C corporation for that matter. It's still based on W-2 wages. I just shared that link there with you. But the takeaway is that all contribution types when your business is taxed as an S corporation are going to be based on your W-2 wages, gross wages. Again, pardon me, I'm fighting a terrible cold here. So take a look at that there. I'm also going to share a link from our website that talks about how to report contributions on your personal and or business tax return. These are some good resources here to have at your fingertips. And lastly, since your business is taxed as an S corporation, I'm going to share another page here from our website regarding FICA. Give me a moment here. So we have a lot of good resources on our website. And we also have a really good YouTube channel with over 1,100 webinars So please like and subscribe to our YouTube channel, and you'll have access to those webinars. You will also receive notifications regarding when we go live. Also, by liking us on the various social platforms, it helps us to get the word out to other solopreneurs. So take a look at this link here as well. It's, regarding how FICA applies to a solo 401k contributions when your business is taxed as an S corporation. It basically, FICA would only apply on the employee side, not the employer side. Okay, let's keep going here. I'm making contributions by check, technically not by payroll deductions. Well, it doesn't matter whether you're making if your business is taxed as an S corporation, it doesn't matter whether you're making it through payroll or by check, because you still have to make sure you do the same reporting on the W-2. So I just shared a link with you here regarding how to report contributions on both a W-2 and your personal and business tax return. So take a look at that link there. Let me bring that link back up here to the front. So yes, while contributions to the solo 401k plan can flow directly from the personal or business bank account, you still have to make sure that you account for everything through the W-2. Now, let me pull up this link here. Okay, so here's the link here of how to, if you take a look at that page there, let me go there as well. Get to that page. If you take a look at that page there, reporting contributions, for a business tax as an S corporation, if you're making employee pre-tax solo 401k contributions, those can get reported in one of two places. I'm looking at my cheat sheet here on this page here, on this link I just shared with you there. If you and again, we're talking here about an LLC tax with an S corporation or a standalone S corporation. So if you make pre-tax employee contributions, let me get to that. So if you make pre-tax employee contributions, you're going to report those. You can report those on Schedule 1, line 16, which is an attachment to your Form 1040. Alternatively, you can report those employee pre-tax contributions in box 12 of Form W-2. You're not so you get to choose. You can report those in box 12 of the W-2, or you can report those in line 16 of the Schedule 1. Don't report it in both. Now, if you're making Roth solo 401k employee contributions, those do not get reported anywhere on your tax return, I should say. However, you are going to report employee Roth solo 401k contributions on a W-2. You don't report them on a Form 1120S, which is the tax return for the S corporation, or on your personal Form 1040 return. But the employee Roth solo 401k contribution does get reported in box 12A of Form W-2 using code AA, and you want to check off box 13 labeled retirement plan. Again, I'm looking at this link here. There's a cheat sheet on that link there that I'm sharing with you. So that's a good reference there. Now, if you make Roth employer contributions, those have separate reporting as well. Those actually get reported on the Form 1120S. So yes, a solo 401k plan offered by my solo 401k financial does allow for Roth employer profit sharing solo 401k contributions, or you can make them as pre-tax employer profit sharing contributions. Whether you make them as pre-tax or Roth employer profit sharing contributions, they have the same reporting on that Form 1120S. For that one there, let's take a look at my cheat sheet here. You're going to report that on Form 1120S, line 17. Now, one caveat about making Roth solo 401k employer contributions, while those are going to be deductible on the business side and not subject to FICA, they're going to be treated as a taxable in-plan conversion on your personal tax return. So while it's treated as a Roth employer contribution and the business gets a deduction on the business tax return side for an S corporation, so Form 1120S, it's going to have to be treated as a taxable conversion on your personal side. So therefore, you need to make sure you complete our online conversion form on the Forms tab of our website. If you make an employer Roth solo 401k contribution, so that we collect the necessary information to issue the Form 1099-R to report that employer Roth solo 401k contribution as a taxable in-plan Roth solo 401k conversion. We've actually put on several webinars on that topic. Again, if you subscribe to our YouTube channel, you can view that webinar as well as many other webinars. So again, if this information is making you feel confident about your retirement future, please take a moment to like and subscribe. It tells the platform that this information is valuable and it helps other solopreneurs like you to find it. Okay, give me a moment here. Let's look for some more questions. Let's see here. So here's a question. I have an existing solo 401k that does not allow voluntary after-tax contributions. If I restate to your plan now, can I still make voluntary after-tax contributions for 2025? You certainly can. And for a couple reasons. Number one, you already have a solo 401k plan. So that plan would get restated to our plan. So you're not opening up a brand new plan. You're essentially switching from provider A to provider B. Therefore, you still have until your business tax return due date plus timely filed extension here in 2026 to make all contribution types to your solo 401k plan for tax year 2025. So if you restate to our plan, we would help you to open up new holding accounts under our plan, so pre-tax Roth and voluntary after-tax. And then we would help you calculate your voluntary after-tax solo 401k contribution for tax year 2025. The overall limit for contributions to a solo 401k plan on the voluntary after-tax side, which is for the Mega Backdoor Roth strategy, is $70,000. And then you would make that voluntary after-tax solo 401k contribution for tax year 2025 here in 2026. And then you would convert those funds from the voluntary after-tax solo 401k to the Roth solo 401k, or you can even convert it to the Roth IRA. So here's an example here. We would help you open up new brokerage accounts. We would then help you transfer your pre-tax solo 401k funds for that existing plan over to this solo 401k plan. And then you would make your voluntary after-tax solo 401k contribution. And then you would convert those funds to the Roth solo 401k plan. You would then complete our conversion form, which is an online form located on the Forms tab of our website, which you can access by looking at the top right-hand corner of our website and clicking on forms. You would scroll down and you would complete the voluntary after-tax conversion form. You would list the amount converted, and then we would collect that information to issue that Form 1099-R to report that mega backdoor Roth conversion to the government. A copy of the Form 1099-R will be sent to you for download, and we will also file a separate copy using Form 1096 with the IRS. So certainly. Okay. See if we have some more questions here. Here's a question. So, is the mega backdoor Roth limited by your self-reported W-2 income? Yes, it is. So keep in mind that all contribution types are going to be based on your W-2 wages, your gross wages, box 1. So whether you're making employee contributions, Roth contributions, voluntary after-tax solo 401k contributions, any type of solo 401k contribution type, those are all going to be driven by your W-2 wages from your self-employed S corporation or your self-employed C corporation. So you need to make sure you pay your, for example, if you're trying to make a contribution for tax year 2025 and you're trying to maximize your mega backdoor Roth contribution to the solo 401k plan, you need to make sure that you report at minimum a total of $70,000 of W-2 wages, box 1 of that W-2 for tax year 2025. And because voluntary after-tax solo 401k contributions are not percentage-based, like employer contributions, but rather dollar-based, then it's a dollar-for-dollar calculation. Hence, why you only would need to pay yourself $70,000 of W-2 wages for tax year 2025, and then you would turn around and contribute that entire $70,000 as a voluntary after-tax solo 401k contribution. So to this bucket right here, and then once you make it to that bucket, aka holding account, whether a bank or brokerage account in the name of the plan, you then convert that to the Roth Solo 401k plan, resulting in contributing a total of $70,000 in Roth Solo 401k contributions for tax year 2025. So, yes, you need to make sure that you have enough W-2 wages from your self-employed S corporation to support any contribution that you want to make to the plan. I also understand the max employee contribution limit for 2025 is $23,500. That's exactly right. The max employer profit sharing contribution is limited by your personal compensation. If, let's say, my final contributions to my 401k that include employee and employer equals 50,000, can I then do the mega backdoor for the 20,000? You're exactly right. So the overall limit is $70,000, and you can break it up. As you mentioned, you can make an employee contribution to the solo 401k, which can be made as an employee Roth solo 401k contribution or as an employee pre-tax contribution. You can then make a profit sharing contribution, which would be 25% of your W-2. So, and then the difference up to the overall limit of $70,000 can be applied as a voluntary after-tax solo 401k contribution and then converted to the Roth Solo 401k plan. So you've made both employee contributions, employer contributions, and voluntary after-tax contributions. You can also forego making employee contributions and employer contributions and solely make voluntary after-tax solo 401k contributions up to the overall limit. But you can now go over that limit regarding all three sources if you're if you're under age 50. Now, keep in mind that whether you're age 50, under, or older, the mega backdoor Roth solo 401k strategy, you can never contribute the catch-up contributions, whether they're normal catch-up or the super catch-up contributions. Those can never be applied as a voluntary after-tax contribution. Those can only be applied as pre-tax contributions under certain circumstances. Keep in mind there are now new Roth solo 401k catch-up contribution rules effective for tax year 2026 and going forward. We've actually done a webinar on that where if your self-employed business is an S corp or C corp, and if your earned income, actually box 3 of your W2, if that box there is it's over $150,000, then you have to make that catch-up contribution as a Roth contribution. You can no longer make it as a pre-tax contribution. Those same rules do not apply for sole proprietorships or partnership self-employed businesses. Let me pull up that. We've actually done a webinar on that topic, but let me they're called mandatory Roth catch-up contributions. Let me see if I can share this link with you so you can at least take a look at it. That was just a high-level summary of those new Roth catch-up contribution rules. So take a look at that link there. But in a nutshell, it typically only applies to C corporations and S corporations, self-employed businesses. And it comes down to determining whether or not box 3 of your form W2, which is the wage and tax, which is obviously your wage and tax statement, if that box 3, which is the Social Security wages, if that box there has wages of that exceed $150,000 in your self-employed business as an S corp or C corp, you're not going to be able to make those super catch-up or normal catch-up contributions as pre-tax contributions anymore, starting in tax year 2026. You would instead have to make them as Roth solo 401k catch-up contributions. But take a look at that link there. Okay, let's see here. So I already have an IRA and Roth at Fidelity. Do I need to open up a Schwab CRA now? Well, I don't quite understand. It sounds like you have IRAs. So IRAs are different than solo 401ks, obviously. So you need to have separate brokerage accounts for the solo 401k, as this slide here shows. So don't confuse IRAs with solo 401k plans. There's the Roth solo 401k and there's a Roth IRA. So yes, you're going to need separate holding accounts under the solo 401k plan to hold the pre-tax solo 401k funds, Roth solo 401k funds, and voluntary after-tax solo 401k funds. Here's a question. I have registered my startup as C Corp. So do the mega backdoor Roth can increase my tax-free W2 wage limit? Well, so if your self-employed business is taxed as an S Corp or C Corporation, the contributions to the solo 401k plan are going to be based on your W2 wages from that business. So if you report at least $70,000 of W2 wages from that C Corporation for tax year 2025, and you have not yet opened a solo 401k plan, or if you already did, then you can still open a solo 401k plan here in 2026 and make tax year 2025 voluntary after-tax solo 401k contributions, and then convert those to the Roth solo 401k plan. Okay, we haven't even started our today's topic, which is how Fidelity Register Investment Advisors can open up a solo 401k plan for their clients who have a self-employed sole proprietorship here in 2026 and still make tax year 2025 retroactive solo 401k contributions. So let's take a look at that. We'll come back and look at some more questions here in a moment. So many of our clients hire a financial advisor, and many of them are registered investment advisors, and they use Fidelity to custody their clients' assets. So if you decide to open up a solo 401k plan, my solo 401k financial offers a solo 401k plan that allows for voluntary after-tax solo 401k contributions, the mega backdoor Roth solo 401k strategy, employer Roth solo 401k contributions, as well as pre-tax contributions, solo 401k participant loans. It can be invested in equities, private equity, and so forth. It also has the $1,500 auto contribution credit built into it. So many registered investment advisors will use my solo 401k financial as the solo 401k plan document provider. So they'll open the plan with us and they'll custody their clients' assets over at Fidelity. So, and this is especially popular for registered investment advisors whose clients who are sole proprietors and they want to open up a solo 401k plan and utilize the mega backdoor Roth solo 401k strategy, because Fidelity offers their own solo 401k, but it doesn't allow for the mega backdoor Roth strategy. So the registered investment advisor will utilize my solo 401k financial, will help the investment advisor to open up those brokerage accounts at Fidelity, and then will help to run calculations for that mega backdoor Roth strategy. Also, the advisor, their client may also want to borrow from their solo 401k plan through a solo 401k participant loan. So if Fidelity's investment solo 401k does not allow for participant loans, but a solo 401k offered by my solo 401k financial does allow for solo 401k participant loans as well, and we would go ahead and draft those loan documents. The loan payments would flow directly to those Fidelity brokerage accounts for the solo 401k offered by my solo 401k financial. So from a contribution perspective, with my solo 401k financial, if you have a client who has a self-employed sole proprietorship, it's actually not too late to open a solo 401k plan here in 2026 to make contributions for tax year 2025. And that's going to be true for both employee contributions, employer contributions, and voluntary after-tax solo 401k contributions. Because Secure Act 2.0 changed the rules, which make it more favorable for a self-employed sole proprietorship to open a solo 401k plan in the current year, and so that he or she can make contributions for the prior year. For example, let's say your client's sole proprietorship business wants to sponsor a solo 401k plan, and your client just found out about the mega backdoor Roth, or the fact that a solo 401k plan is a powerful tax shelter vehicle for those who are self-employed. So you would be able to open up a solo 401k plan through my solo 401k financial for your client here in 2026. And if you do it by April 15 of 2026, that individual, he's going to be able to make contributions to the solo 401k plan by April 15 of 2026 for tax year 2025. And that's true for all contribution types: employee contributions, whether pre-tax or Roth, employer profit sharing contributions, whether Roth or pre-tax, as well as voluntary after-tax solo 401k contributions. Now, if the individual files a business tax return extension for his or her sole proprietorship, so a personal Form 1040 return extension, then He's going to have he or she will have an extra 6 months. He or she will have until October 15 of 2026 to open a solo 401k plan. However, he would only be able to make employer profit sharing contributions and voluntary after-tax solo 401k contributions for tax year 2025, not employee contributions. In order to make employee contributions for tax year 2025 here in 2026, that sole proprietorship is going to have to open up a solo 401k plan by April 15 of 2026 and make that employee contribution. So that's how it works with regards to a sole proprietorship. So again, here at my solo 401k financial, when the registered investment advisor that uses Fidelity to custody assets works with my solo 401k financial and opening up a solo 401k plan for his or her client, we'll go ahead and draft a custom solo 401k plan document. We'll pre-fill out all those Fidelity brokerage forms on the institutional side. You can then submit them through your back channel directly to Fidelity, and then we'll be the ones performing the ongoing compliance support, such as Form 1099-R, preparation for distributions, conversions, Form 5500 Easy. Once the value of that plan is greater than $250,000 in value as of the end of the plan year. And if you're a registered investment advisor and use another brokerage firm, whether Altruist or Schwab, Interactive Brokers, any firm for that matter, our plan is drafted to allow for those brokerage accounts to be open through the brokerage firm that you decide to use for your client. And again, our solo 401k plan that we offer does come with the auto contribution credit. Solo 401k plans offered by Fidelity, Schwab, Ascensus, and other firms like that do not come with the auto contribution credit. But we were actually the first in the industry to offer a solo 401k plan with the auto contribution credit built into it. We started offering it around the middle of December of tax year 2023. And keep in mind that we can also add the auto contribution credit to an existing plan of my solo 401k financial, or if you change from an existing plan somewhere else over to our plan, it can be added as well. So it's available to both existing and new clients. If you're an existing client from the middle of December of 2023 and prior, we can update your plan to add the auto contribution credit, and you can start taking advantage of it here in 2026. Of course, if the plan is set up for the first time in 2026, we would add that auto contribution credit immediately. The way the auto contribution credit works is that it's a total of $1,500. It's going to be spread out in $500 increments over a 3-year period. And it's a dollar for dollar credit. So it reduces your taxable income on the business side on a dollar for dollar basis. So basically, those tax credits essentially cover the cost of opening and having a solo 401k plan for years to come. Also, you're not required to contribute to the solo 401k plan in order to qualify for the auto contribution credit. As a matter of fact, you can opt out of contributing, and you're still going to be able to contribute all the way up to the overall limit for the year, provided you have enough net self-employment income to support those contributions. So it's a win-win situation. And the government probably has an auto contribution credit available because we have a retirement crisis in this nation. So they want to make sure that self-employed individuals save for retirement. You're going to claim this $500 per year credit for a total of 3 consecutive years and $500 increments. So 3 times 500 is a total of $1,500. You're going to file Form 8881 each year to claim that $500 credit. And we do have a PowerPoint and a video walkthrough on how to fill out that Form 8881. Again, please take a look at our YouTube channel, subscribe to our My Community, where we have over 32,000 members. So looks like we've come to the end of our time today. So thank you so much for investing your time with us. I know that your time is valuable, but we think that your solo 401k and IRA retirement feature is worth it. Again, if you haven't yet, please like today's webinar, subscribe to our YouTube channel. And until next time, have a good rest of the day.